Apple, you know them, you've heard about them, you probably have their products, you got something, maybe you have their stock. If you have their stock, if you bought it in September, say, oof da, you have suffered. Look at Apple there, fell under $400 yesterday, lost its title as the world's largest company by market cap. To talk about that, what it means, Steve Russolillo. A lot of Apple posts yesterday, huh, Steve?
A lot of Apple, yeah. So this is quite interesting because Apple shares are down 40%, and Apple has now lost its spot as the #1 company in the world by market cap, and now Exxon is #1.
Right.
So Apple was #1 for most of 2012 up until January of this year, and then the two have kind of been jockeying back and forth over the last few months. But I think what's particularly interesting about this is that Apple and Exxon shares are both down for the year. So 2013, the big story is how stock markets have been hitting record highs. The S&P 500 is up 8–9% for the year. Last week hit its own all-time high. But its two biggest components, Apple and Exxon, have not been participating. Apple is down more than 25% this year, down more than 40% from its record high in September. And Exxon is about flat. It's down about 1% for the year. So you would think the two biggest components that should be driving this thing are actually not. So it's all the other components in the index that are really propelling it higher.
It's amazing. We were just talking to Benoit about Morgan Stanley. Again, it's the same kind of thing. You see these record index numbers and you think, wow, things must be great. But then you get a story like Apple, a story like Morgan Stanley earnings, and they kind of undermine the idea of the record indexes. But talking about Apple, stock's down 40%. They make a lot of money. I mean, they make a lot of money.
Yeah, amid all the talk about how far the stock price has fallen, the company is still a very, very, very successful company. I don't think we can undermine that idea right now at all. And so it brings up the question, when is this stock finally going to bottom out? And of course, you know, we're not fortune tellers, so we don't know that. But at the same time, though, there are metrics out there that say that maybe this stock should be poised for a turn. And one of them is the price to earnings ratio for Apple, which is sort of a valuation metric for the stock. It is now at around 9, trading at 9 times its projected earnings over the next 12 months. A 9 number there is its lowest level in at least 10 years.
Wow. So
basically, if you're looking at how cheap this stock is, this is the cheapest the stock has been in at least 10 years. So it's a pretty astonishing number to think, especially with, you know, how successful the company is still doing. Yes, its growth is slowing a little bit. Yes, there are concerns about competitors, but it's still a very, very successful company.
It's unbelievably successful. Yeah, but that PE wasn't even high at 700.
That's another
it's still
great
going
point.
down.
Right.
One that we're going to write a lot about, Apple. I love that stock. All right, Steve, thank you very much.
Thanks so much.